Today, we are looking at an important development in the international currency market involving the Vietnamese dong, while also examining what this movement can teach us about exchange rates, currency strength, monetary policy, and the broader expectations surrounding currencies such as the Iraqi dinar. According to the latest information provided, the USD VND exchange rate fell to 26,155 on the 10th of August 2026, representing a decline of 0.19% from the previous trading session. At the same time, the Vietnamese dong has strengthened by approximately 0.38% over the past month and is up around 0.30% over the last 12 months. At first glance, these numbers may appear to be specifically about Vietnam and have little connection to Iraq. However, for anyone following the Iraqi dinar, there is an important lesson here. Currency movements should always be analyzed through actual market data, monetary policy, economic fundamentals, and the mechanisms that determine exchange rates rather than through speculation or assumptions about sudden revaluations. The USD VND spot exchange rate tells us how many Vietnamese dong are required to purchase $1 at the current market rate. When that exchange rate moves lower, as it has in the latest data, it means the dong has strengthened relative to the US dollar. In this case, the movement to 26,155 indicates that fewer dong are needed to represent the value of $1 compared with the previous session. The daily change of 0.19% is not by itself evidence of a dramatic currency transformation. It is better understood as one data point within a much larger trend. What makes the latest figure more interesting is that the dong has also strengthened over the 1 month period and has recorded a modest gain over the past year. That suggests the movement is not limited to a single trading session. For financial market observers, this distinction is important. A one-day currency move can happen because of changes in market positioning, interest rate expectations, global dollar demand, trade flows, central bank activity, or broader investor sentiment. A longer term trend requires a deeper examination of economic conditions. Vietnam operates a managed exchange rate system rather than allowing the currency to move completely without policy influence. The State Bank of Vietnam plays an important role in maintaining monetary and exchange rate stability. Therefore, movements in USDB VND need to be interpreted within the context of Vietnam's monetary policy, inflation conditions, trade performance, foreign exchange flows, and the strength of the US dollar internationally. This brings us to an important point for Iraqi dinar followers. The Iraqi dinar operates within a very different economic and monetary environment. Iraq's exchange rates policy, oil dependence, foreign currency flows, fiscal conditions, banking sector reforms, and central bank policy all have a major influence on the value and stability of the dinar. Therefore, we should not take a movement in the Vietnamese dong and automatically apply the same conclusion to the Iraqi dinar. Every currency has its own economic structure. A stronger dong does not automatically mean that the dinar is about to strengthen, and it certainly does not establish a specific future IQD exchange rate. However, there is a broader lesson that Iraqi dinar followers can take from this development. Currency values are influenced by economic systems, and meaningful currency changes normally have identifiable financial and policy mechanisms behind them. The latest USD VND figure also highlights the importance of distinguishing between a spot exchange rate and a forward exchange rate. The spot exchange rate represents the current price for exchanging currencies, generally with settlement taking place according to the market's spot convention. A forward exchange rate, on the other hand, is agreed today for currency delivery and payment at a specified future date. This distinction is extremely important when analyzing currency news. A forward rate is not necessarily a prediction that the currency will reach that exact level in the future. Instead, it reflects the terms of a future currency transaction based on market conditions, interest rate differentials, expectations, and other factors. For Iraqi Dinar followers, this is a useful reminder. Whenever a future exchange rate appears online or in financial discussions, a quoted future rate should not automatically be interpreted as confirmation of a future revaluation. The source of the rate, the type of transaction, the settlement date, and the underlying market must all be understood before drawing conclusions. Now, looking at the latest Vietnamese data from a broader perspective, the 38% monthly strengthening and 30% improvement over 12 months are relatively modest movements. That is actually significant because healthy currency market analysis does not require dramatic numbers to be important. Gradual changes can tell us a great deal about the direction of capital flows, monetary conditions, and market confidence. For Vietnam, currency stability can support international trade and investment by reducing uncertainty for businesses. Exporters, importers, manufacturers, and international investors all pay attention to exchange rate movements because currency values influence costs, revenues, margins, and purchasing power. For Iraq, the same principle applies, although the country's economic structure is different. Iraq's economy is heavily connected to oil revenues, and foreign exchange earnings from energy exports are an important source of dollars for the economy. The relationship between oil revenues, government spending, imports, foreign exchange demand, and the banking system therefore remains central to understanding the dinar. This is why banking sector modernization is particularly important for the Iraq dinar's long-term outlook. Stronger and more transparent banking systems can improve confidence, increase formal financial activity, strengthen compliance, and make it easier for businesses and individuals to conduct legitimate transactions through regulated channels. The short term implication for Iraqi dinar followers is that today's Vietnamese dong movement should be viewed primarily as an international currency market development rather than direct evidence about the IQD exchange rate. There is no factual basis in the information provided to claim that the Iraqi dinar has suddenly changed its official value because the Vietnamese dong strengthened. The more useful short term takeaway is that currency markets remain highly sensitive to changing economic conditions. Even relatively small percentage movements can occur from one session to another, while longer term trends develop gradually through underlying fundamentals and policy decisions. In the longer term, investors and observers should continue watching the factors that directly affect Iraq. These include central bank policy, inflation, foreign exchange reserves, fiscal management, oil revenues, banking reforms, international financial integration, trade flows, and confidence in the domestic financial system. If those areas improve over time, they can potentially contribute to greater monetary and financial stability. But stability should not automatically be confused with a dramatic increase in the external value of a currency. Those are two different concepts. Another important point is a purchasing power. A currency becoming stronger against the US dollar can reduce the local currency cost of imported goods, assuming other conditions remain unchanged. But exchange rates are only one part of the economic picture. Inflation, wages, productivity, interest rates, government policies, and international trade all influence the real economic impact of currency movements. For Iraq, This distinction is especially important because the country's economic performance cannot be measured by an exchange rate number alone. A sustainable improvement in economic conditions would ideally involve stronger institutions, diversified economic activity, improved financial infrastructure, productive investment, and greater participation in the formal banking system. So, what should Iraqi Dinar followers take away from today's update? First, the Vietnamese dong has shown modest recent strength against the US dollar, with USD VND falling to 26,155 on the 10th of August 2026. Second, the 1 month and 12-month figures indicate that the latest movement is part of a broader but still relatively moderate trend. Third, the distinction between spot and forward exchange rates is essential when interpreting currency market information. And finally, the biggest lesson for IQD watchers is that responsible currency analysis requires evidence. Exchange rate changes should be connected to actual monetary policy, economic data, central bank decisions, and market mechanisms. Rumors, social media claims, or unsupported rate targets should not replace verifiable information. The Iraqi dinar remains a currency that deserves careful observations because developments in Iraq's economy, banking sector, government finances, oil market, and international financial relationships can all influence its future monetary environment. But predicting a specific future exchange rate with certainty would not be responsible. For now, the latest USD VND movement provides another example of how currencies can strengthen or weaken gradually in response to changing market conditions. It also demonstrates why looking beyond a single day's percentage change is essential. The 0.19% decline in USD VND is meaningful as market information, but its importance becomes clearer when viewed alongside the monthly and annual performance and the economic framework behind Vietnam's exchange rate system. For Iraqi dinar followers, the message is straightforward. Watch the fundamentals, follow official announcements, understand the difference between market prices and future contracts, and avoid treating every currency movement as evidence of an imminent revaluation. As we continue monitoring the Iraqi dinar, the Vietnamese dong, the US dollar, and global currency markets, the goal should always be to separate verified financial information from speculation. Currency markets can change quickly, but sound analysis takes time and evidence. Thank you for watching Iraqi Dinar News. Make sure to subscribe to the channel and like the video if you want responsible, factual, and carefully analyzed updates on the Iraqi dinar, Iraq's economy, and important developments across the global currency market. Stay informed, stay analytical, and always verify financial information before making any decisions. This content is provided for informational and educational purposes only and is not financial advice.